Alright guys, I'm starting today's video a little bit late, but we're looking at the S&P 500 E-mini futures chart. I'm using the time frame 2000 tick chart. I like to use the 2000 tick instead of the 1 minute because it shows price action a lot cleaner. You can actually start to see like the moves, and each tick is a transaction in the market, right? It's very clean when a bar is forming to see what the majority is, buyers or sellers. So as a bar is forming, it gives you a lot more information in depth on what the market's trying to do. Like if you get a strong reversal at the end of a bar, like at the last 500 ticks or so, that pull it back below EMA or whatever, you can have a lot of confidence that there's a lot of people that want it to stay below EMA. You know what I'm saying? And that shows the overall bias of that bar. And if that bar forms to set up for you like a confirming pattern that you already have an idea of what the bias is, then that's exactly what we're looking for. We're looking for the bias of the market. We're looking for our key entry points, which is the trend lines or the EMA. And then you're looking for a setup to confirm that. And then at the end of all those things forming, we use the final signal bar to determine whether or not we're going to enter that trade. And you can risk however much you want. The strategy works on any symbol, not just ES. It can work on NASDAQ, it can work on gold, it can work on oil, it can work on all of it. As long as you're comfortable drawing these channels and you don't get too ahead of yourself. And it's easy to draw like a tight channel and then it turns into a wider channel. You just didn't have the information yet. So you have to be really confident. Like as you can see here, this channel is about to get 3 confirmed touches at this top EMA. Now we do have like a potential for a small overshoot here at the bottom. And then after this overshoots, we expect it to correct and then break out of the other side and then test new low. So that's something we're looking for here. I was considering a second entry short right here at the EMA. But I'm going to play this as overshoot, I think, and just play it safe. We'll see how it reacts here. If we do push back below EMA, I can consider a lower high. But overall today, started up here in this trading range. It was pretty slow, real choppy. I'm still recovering from my illness, so I'm taking things real slow. It's easy to get upset or angry or emotional, when you're just sitting here in this chair and your throat is sore and you're just uncomfortable, So I'm just taking it real slow. I took yesterday off just to recover a little bit more. I tested positive for COVID, so just letting myself recover. But I think I'm back and ready to trade again. Still playing patient though, waiting for the perfect setups. I don't want to risk capital on something that is kind of I want something to really set up and like, no, that trade I should be in. I should be taking that trade and nothing else. That's the kind of confidence I'm looking for. So we broke out of the range, and then as you can see, we have a breakout pullback. It broke out, pulled back here, and then kept working lower, and then it pulled back again to test EMA, and then we just had this strong spike. And after this strong spike, we look for a wider channel instead of just this one that has breaking new low. So watching this wider channel now, if we break out, I'm expecting new low. If we stay in, there might be a wider channel here that I can adjust these lines and see what we got going. But definitely thinking short. Definitely want new low. Just looking for a pattern to confirm that. Hopefully a lower high here. I'll come back if something nice happens. All right, guys. So as you can see, overshoot reacted just as we expected it to. We had overshoot here. And then strong spike, break, push to new high. Now, after a push to new high like this, in a downtrend, you expect it to continue lower. But it just chopped sideways, and then we broke out of the top trend line here. So now that that's happened, we can have confidence in this overshoot. And this trend line is confirmed enough. You can see it kind of had a confirmation here. It wanted to continue going lower, but it can't ignore the overshoot. And with that, I'm very confident that this downtrend needs a new low. So now that I have the bias of what I'm looking for, I'm looking to go short to test new low. I need to find the pattern, which is either a second entry short, so new low, first entry short, pullback, second entry short. That has to form below EMA, because EMA is going to be my main confirming factor here, right? Like if EMA holds to the downside, that shows that I can use this as a key entry point, right? Or failed second entry long. So it's basically a second entry long that fails. And then once any of those form, I need a signal bar before I can consider entering. There's different tiers of signal bars, right? Like this big red bar right here, tier 1, perfect signal bar to go short. This one, see how there's a wick at the bottom? It's less likely to succeed if I go short below this bar because there's a wick at the bottom and it shows that there was some sort of rejection or bullish pressure on this bar. But if a bear bar closes real strong at its low, you can have a lot of confidence in that signal bar. And it has to be confirming a setup, right? It can't just be a bear bar off of EMA or a bull bar off of EMA. You need the setup, and then the signal bar is your last confirming factor before you enter that trade. As traders, it's our job to manage and protect our capital. We get paid not for the time that we sit here in front of the charts. We get paid for our decision making. A lot of traders make the mistake of coming in here and they come into the market expecting to take a trade, or they come into the market just thinking about the money or the payout or whatever it may be. If you come into the market and think about those things, like fundamentally trading has nothing to do with money. It's just lines on a chart, information being displayed in these types of patterns, in this formula, the candlestick. It's just information being displayed to us, and we wait for something to happen. We wait for that, the rules and guidelines that we already have set for ourselves. We wait for that. And then when something happens, we just click a button. You're literally just a monkey sitting in front of a screen looking at information and clicking a button when something happens. So if you come into the market and you're thinking about the money and you're thinking about all these things, like if you think of all the mistakes you've made in trading, whether it be jumping in too late, jumping in too early, moving your stop loss, going for too big of a profit, there's a lot of things. And if you look at the core reason you made that mistake, it's because you're focused on the money. Like if you jump into a trade too late, like FOMO, right? You see the market start to make this gnarly spike down and you enter the trade late and then you get stopped out, or you end up with like a huge stop loss, way more than your normal take profit. You entered that trade because you want to make money more than you want to make good decisions. Or if you enter a trade too early, you're impatient. And you're impatient because you came into the market expecting to make money. You came into the market expecting a trade to be before you. But if you come into the market and expect not to take a trade, you have the mindset of, if a trade forms that follows my criteria, I'll take it. But if not, I'll take one tomorrow, or I'll take one the next day, whatever. We're just here to get paid for our decision making, not our time. So just something to keep in mind, just don't come into trading. I know everybody comes into trading to make money. That's normal, right? That's the reason we do this. But you have to realize that money is a side effect of making good decisions in this market. You know what you need to do. Look at all of your past trades that have lost. The stupid trades that you look at yourself and you're like, damn, why did I take that? Look at that trade, and I guarantee you can tell me what you did wrong. Everybody, you can tell me what you did wrong. You know what you did wrong. You shouldn't be doing it. And you're emotional because it's all about the money in your mind. It can't be. It's a simple game, man. Data. If this happens, click button. That's it. Don't hype it up to be something it's not. Just be patient. Wait for your setup, and if nothing forms, then no worries, man. It's better to walk away from the day not taking a trade than walking away from the day and taking a stupid trade with a loss. or even a win, feels like crap even if you make money and you took a trade that you shouldn't have taken. We're not gamblers. We got to be patient here. Just some food for thought. Okay, so now that we kind of broke back above EMA here, I can't consider a lower high just because this big bull bar, you can see it closed above EMA. So as long as we don't break above this high and get count reset, I would need a failed second entry long below EMA. But it looks like we got count reset. So as you can see, kind of got like a multiple test here. We have one bounce, two bounces, depending on what happens here, a potential three bounce. So if we bounce off of this line here, there's definitely some resistance. So maybe a lower high below EMA. All right, this is pretty decent here. But we didn't get a trigger below, and I really don't like going short directly into the EMA here. You can see it likes to bounce on this EMA, so I'm just gonna, even if it triggers, I'm not taking it. It just doesn't follow my criteria. It's a first entry short, starting from this new low, first entry short, if it breaks below that bar. So still waiting, see what happens. All right, it looks to me like it's trying to test this level up here. I definitely want to see it break below EMA before I consider going short. All right, guys, I just came back from my break, and we had a perfect second entry short right here off of EMA. You can see we had this channel working lower, and it had one, two, three confirmations confirming that this channel is a real thing. You can see how well it supports this bottom trend line. It bounced, and then you can draw your little short-term uptrend working higher. We have a breakout of that small channel, new high created, so all bull pressure played out, and then a perfect bear bar off of EMA. Let me see. Even if I was here, I risk 8 ticks, so I wouldn't have gotten filled. You can see it opened but the next bar opened right here, and it just gapped down. Now you have this lower high here, but you see how far away this body and wick is from the EMA. I like to skip those. It's just, you can have an extra little pullback to EMA and you can get stopped out. It's better to just be patient and wait for something at the EMA. But overall, so we had this little one working lower with overshoot, break, new low, and it just kept working lower, as you can see. So same here. We have a break out of this channel. We're pushing up right now. But the market may even consider, like, this one needed new low, right? It may even just consider this one big push to new low. Like, this channel might not get new low, depending on if we push below EMA here. I could consider taking a short to get new low of this one. So just sitting patient. Shame I missed this one. Really, really good. I wouldn't have gotten filled anyways, but definitely, I mean, perfect price action lately. The market's been moving so smooth, man. Like, it's been going so well because I can just see, like, all these rules that I've learned over the years, like, they just work, man. It works perfectly. And lately the market's been following those rules, those price action rules, doing exactly what it should be doing. So it's super predictable. It sucks. There's a lot of good, like, setups that don't form, like, good signal bars. You just end up, waiting all day. Watch like 4 setups go without you because you can't enter because of the signal bar. So you have to be really patient. But if you're patient, man, this strategy can really, really make you a wealthy man. So stay patient, guys. We'll see what happens with this little spike up. It looks like we had a little overshoot, break out of this little uptrend, push to new high now. So I'm predicting we're gonna push below EMA here. We'll see what EMA does, if it reacts or not. See if we can get a short. All right, so far it looks like EMA is holding. Let's see if we can draw like a. I don't really like any of those. Yeah, can't really draw a short-term downtrend here. So just sitting on my hands. We might push below EMA. We'll see if it holds here, actually. All right, guys, we created new low for that downtrend like we originally expected it to. I'm going to go ahead and call it here. Getting kind of bored and I don't want to make any stupid decisions. But after new lows created for this downtrend, we can expect there to be either correction. So in this little trading range here, I just drew these just to be prepared for it. But it can either correct sideways or create a new market structure up or down. Like as you can see here, we had this downtrend working lower. Overshoot. Broke out of the top of the channel just like we expect overshoot to create. Pushed back above EMA and then eventually created new low. Then market structure created another new downtrend. Broke out of this channel. Push above and then created new low. So that's the highest probability trades that you can find. You know, you want to find like a channel like this that, like, look how confirmed this channel is. First swing, second, third, fourth, almost a fifth. Like, it's just super confirmed. You can see how well it's respecting these levels. And once a channel breaks, I mean, a channel like this is bound to get new low. So if you can find like a failed second entry long, second entry short, anything like that with a good signal bar and get filled on that trade. I mean, I scalp 8 ticks, but you could really, like, if you were to enter like here at EMA, you could really, you know, put your take profit at new low. It's gonna make new low, you know. I just like to scalp 8 ticks because I like to get in and out of trades, and I like higher win rate rather than higher risk reward. That's just me personally, but that's why I have the 2 at 16 and the 2 at 32. So overall, really clean price action. You know, we had this trading range at the beginning of the day, broke out of it, and you see how it came back and tested that support as resistance, and we had this strong push down. So overall, pretty good. Another trade I saw, I wasn't here for this trade, but you can see a nice second entry long here. This little uptrend needs new high, as well as this one. So you're really looking for a long here. You're kind of at the midline of this little trading range. It's not a very, very good trading range, but you can see it has respected it, you know. So I just drew it, just trying to figure out what market structure we were in. I don't really like this trade personally because the body is so far away from the EMA. I like to see the body at EMA, you know, strong rejection, this long wick below EMA showing that bears really tried to push it below EMA and it just rejected and pulled back up. So, I mean, in hindsight, the trade worked, but we can't trade hindsight, you know. This isn't a high probability trade. I mean, I like it. If you're a more risky trader, you can consider it, but I probably would have skipped if I was there. So, doing well. I think I'm finally over this illness. You know, I still got a little bit of congestion, but I think I'm good to get back in the game and start making videos again. So I'll see you guys tomorrow. Good luck with your trading.